Hey guys, hope all of you are coping as best as you can during this bloody Tuesday. It has been an absolute bloodbath throughout the whole day, and GameStop and AMC saw some ugly lows after breaking some old support walls that haven't been tested for many months. Today we are going to talk about why we fell this way, though you probably know why already if you watched my Sunday video. Senators are starting to come out and outright say they have lost control of things and are unable to tell what is to come. However, before we even think about talking about this, I want to discuss something very important about the GameStop and AMC community. In yesterday's video, the most upvoted comments were asking me to talk about some recent FUD coming from a prominent YouTuber stating that shorts covered their positions and that essentially the squeeze is done and over with. I typically ignore this type of stuff, but due to a large amount of requests on YouTube as well as on my Twitter, I guess many are hoping that I will shine some light on the subject. Before I explain to you why shorters have not covered any positions, let me just say how disappointing it is to see some people believe this to be true. Though a very small minority, the fact some feel so anxious because of the uncorroborated opinions of someone exposes the fragility and lack of confidence in the investment decisions some of you make. I said this on my Twitter. The biggest pet peeve of mine is just how easy and willing some investors get about buying stocks that some YouTuber pumps without doing their own research. Remember, every YouTuber serves a purpose for a target demographic. Some like to hype, others to inform. It is your job as a responsible consumer to do a bit of critical thinking and dissect which one is best suited to listen and take in opinions from. This is why a small chunk of you get easily frustrated and sometimes paper hand. Some will just click on stuff that they know will say what they want to hear and call it a day, only to then watch the stocks fall and get angry. Everyone should be reading and learning constantly, so to understand the nature of meme stocks and not get easily swayed by people whose financial goals do not align with yours. Content creators like to generate ad revenue through clicks, and will do whatever they have to in order to make money, even if it means lying about having contacts who are on the inside of everything happening. They appeal to the lowest denominator because some of you never question anything being said. That's why I made this channel, because I just wanted to provide content that is verifiable and easy to understand and access. I do not cover everything there is, which is why I always try to get you guys to read and learn and not just conform with my opinions and takes. To address the concern, which to me is mind-blowing some of you even have it, shorters never covered. To cover a short position would mean to buy back every stock available in the market since the majority of shareholders are holding without selling. If that was the case, today we would have seen AMC trading in the thousands of dollars, not at a $17 low. The proof is right in front of your eyes, in the daily charts. GameStop and AMC continue to trade almost identical, along with other meme stocks copying the same minute movements generally speaking, which shows that all these stocks, which have nothing to do with each other, are being traded and manipulated by the same algorithm. If shorts had covered, we wouldn't be trading similarly at all. To some of you, this isn't enough, so let's add more evidence. Shorts haven't covered, and a big piece of evidence lies in the rush we have seen from the DTCC to pass amendments to their rulings back to back for no apparent reason. We know shorters haven't covered because options still show nefarious activity associated and correlated with introducing naked shorters and simultaneously hiding positions. We know shorts haven't covered because swap cycles continue to move GME and AMC stock in proportions that wouldn't be possible if all shares had been bought back. It blows my mind that a small fraction of you are swayed by someone on the internet who says he knows somebody who told him the devil covered short positions and that it's all done and over with, all while laughing about it. I know this is going to come off as a bit ironic, but stop treating YouTuber personalities and their opinions as gospel. Nobody knows what's happening with shorters, nobody has deep connections inside headquarters of hedge funds, nobody has cracked the algorithm, nobody knows the amount of synthetic shares out there. Every YouTuber has a different reason as to why they produce content, and it should be at the forefront of your awareness that every time you listen to anyone, you never know what reasons they might have for what they are saying. Any one YouTuber saying the squeeze is over with is either trying to generate revenue by starting drama, or have simply decided to move on since creating content for meme stocks isn't as financially lucrative as it was last year. I personally am not leaving. My content will continue to be pumped every day, regardless of falling viewership, because I know for a fact the value and worth of my shares, and I produce videos to share the due diligence and hopefully inspire others into learning for themselves the truth of what is happening. This is the first and last time I will ever make a video addressing such a moronic and attention-starved take on the current state of meme stocks. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's get started. Stocks fell sharply on today's trading session. The Dow Jones plunged by more than 600 points, with Nasdaq falling 2.4% and the S&P 500 shedding 1.9%. The reason for this fall is simple, and we have been talking about it on this channel for days now. This is nothing more than a continuation of the sell-off as a result of the uncertainty and scared nature regarding the interest rates that will be imposed by the Fed. Compounding this fall are the earning reports we discussed on Sunday's video. Goldman Sachs reported fourth-quarter earnings well below analyst expectations, reflecting declining profits for the last 3 months of the year due to weakness in its trading arm. We are still waiting for reports of Bank of America, PNC and the Bank of New York Mellon, but already analysts are expecting a bad earning report similar to that of Goldman Sachs, with poor fourth-quarter earnings. It is a big and important time of the year, because this earnings season should temporarily reduce panic from the Fed, as depending on the results of earnings, could instill hope and optimism in investors, and therefore perhaps bring a new rally to drive the major indexes to new record highs. However, if the outlook of the reports is more aligned with the poor results Goldman Sachs had, expect a very ugly fall in the markets, one that will accentuate and initiate a full stock market reversal. As we have said many times, last year's magnificent rally made the majority of stocks get overvalued, and it's time for the market to have a full-on correction. With the earnings season, Omicron and the Fed's hawkish stance, if earnings seasons doesn't produce pretty numbers, I think we are more likely than not to see big market retracements, and GameStop and AMC will not be isolated from this. As such, adjust expectations to what is happening in the full scope of things and get ready to get the best discount you could have ever hoped for. I want to talk a little more detailed about inflation, because Washington, D.C. is making a lot of money because of it while simultaneously telling everyone to get ready to get pounded with what's coming next, and no, I am not being hyperbolic. Let's address Washington profiting off of the pandemic. The country might be strained and the economic outlook tattering, but individual income tax receipts rose 55% during its first fiscal quarter. Tax revenue is rushing into the Treasury Department while politicians claim and scream poverty on national television. The government talked a lot of how they were forced to grant trillions of taxpayer money to multi-billion-dollar corporations while they are collecting big tax receipts. I do not want to hear any of these politicians talk about how we normies need to start paying more. To give you some numbers, individual income taxes revenue soared by $189 billion, while corporate income tax rose by just $30 billion. Goes to show that all that sweet money that Washington handed to the biggest corporations did not trickle down to anyone but the pockets of the wealthy on top. Senator Rand Paul told the Senate Committee on Small Business and Entrepreneurship that he blames the 7% inflation spike on excessive pandemic relief spending by Congress, and warned that based on what he has seen and knows, things are only going to get worse. This does not sit well with me, because after looking over his newly released 18-page report, his conclusion for things is actually pretty spot on. Crazy times we live in when the leaders of a country call for a full-on crisis and yet none one seems to react alarmingly. The cognitive dissonance of this is just astounding and reflective of the time periods we currently find ourselves in. Let's now talk about today. The Fed submitted over $1.597 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 57% of the total volume today, while dark pool trades for GameStop accounted for 43% of the total volume today. AMC had a larger amount of buy orders than its sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC traded bearishly, losing over 8% for the day. It began trading pretty weak during the pre-market, finally falling below $20 and staying below the VWAP. Upon market opening, AMC fell down, going from 19.88 to 18.87. It attempted to bounce back up, but was unable to, so it ended up falling again, eventually sliding all the way down to 17.80, which was the low of the day. After reaching this, AMC surged again, running past 19 and ending the day at 18.84, below the VWAP. As for what to expect for tomorrow, AMC will find support at 17.88, 17.55 and 17. Resistance will be met at 19, 20 and 20.64. AMC fell for most of the day and the after-hours performance has been very poor as well. Like most other stocks, The overall bearish sentiment of the market is dragging this down, and being compounded many times by the shorters taking advantage of these conditions. I am not worried at all about AMC, let them take it down as much as they want, they are only strengthening bulls by giving them more shares for cheaper. GameStop traded bearishly, losing over 6% for the day. It began trading very bearishly during the pre-market, consistently touching and testing the lower band of the VWAP. Upon market opening, GameStop fell from 113 to 107. After a failed attempt at bouncing back strong, GME continued its downward trajectory, eventually reaching 104.40 as the lowest price for the day. It was after this that GameStop bounced back, reaching 112.23 before falling again and closing at 108.91, below the VWAP. As for what to expect for tomorrow, GameStop will find support at 106, 104, 102 and 99.50. Resistance will be met at 112, 115, 118 and 122. GameStop could potentially dip and retest that 104 support wall tomorrow, and if we do and break it, we are certain to test 100 and possibly fall below it. I plan on buying a ton of GameStop this week, so I am embracing this dip and the great opportunity to grab GameStop shares below 100 once again. And that is all I have for you guys today. I have a consistent viewer base of around 12 to 15,000 people, and I want you all to come join my Discord channel, which already have over 500 people in it. It's all good vibes with some really smart conversations happening. I also provide scalping alerts, which are very accurate as well, so come check them out for yourself. Very cool and suiting atmosphere for all meme stockholders, and I want all my audience to be a part of it. Let me know what you thought of the video. I will link this morning's video in the comments below. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day, keep on buying the dip and to the moon.